So again, pressure in the cotton market. Oliver Slopes with Blue Line Futures in Chicago. And Oliver, let's start with corn. Managed money. I was reading through the notes you sent out this morning. What are we watching as far as managed money in corn?
Well, you would not believe it by looking at the chart, but the funds managed money have amassed a net long position of just shy of 100,000 futures and options contracts, which is the largest net long position since February 2023. And I say you wouldn't guess that because they've just been net short for so long, and they covered all that, now net long 100,000. You would have thought that we'd get a little bit more of a rally in terms of futures prices, but the producers selling, really keeping a lid on that. One thing we're keeping a close eye on through this week's trade is December options expiration. That is on Friday, and that could potentially play a role in price action. But looking past that, the demand side of corn has been friendly and remains friendly in the chart, and the money flow from the funds continues to look constructive. So I think, there might be a little bit more upside in this market. But as a producer looking out to even next year's crop, I think we tack on another 10 or 15 cents from here, and you've got to be looking at that as a potential opportunity to at least establish somewhat of a floor on some of your production.
So when we talk about potential of moving higher, I just wonder if we compare the charts from 5, 10, 15, 20, 30 years or so in the bean market, does that indicate that there may be some upside potential?
Yeah, when you're looking at seasonals, it's more of an art than a science. It's not a guarantee, but we like to look at past trends. And historically, you can see the market kind of carve out a little bit of a low towards the end of November and into December and rally from there. So from a risk-reward perspective, we think there's a good opportunity that could play out again. We've defended those lows from here recently and all the way back to August really well, from 970 to 980. That's proven itself to be a little bit of a value zone for the soybean market, that January contract. So again, from a risk-reward perspective, I think there's some upside potential. We would need to see some demand pick up, and if some weather concerns were to flare up in South America, that could be a tailwind as well. The next big hurdle for the January bean contract, 1018 to 1024. If we can get out above there, potentially that's what spurs managed money to participate a little bit more like we've seen in the corn market.
And we've got to throw wheat in there as well. It's been bearish at least through the last few weeks. Are we turning the corner?
Yeah, big technical breakdown here a couple weeks ago, below 555 to 560. That's old support in the breakdown point. That's now going to be resistance going forward. The bears have control of the technical landscape, but if we can get out above 555, 560, I wouldn't be surprised to see that neutralize some of the bearish developments that we've seen recently. And as you had mentioned early on, some unrest and escalation over in the Black Sea, certainly adding a little bit of a tailwind. Also, the U.S. dollar, that's going to be on a lot of traders' radar this week for commodities as well. If that continues to cool off a little bit, that could be an added tailwind to the wheat market.
All right, Oliver, hang on. We'll take a break. Be right back, and we'll talk livestock futures. Market day report continues. Let's bring back in Oliver Slope, Blue Line Futures, commitment of traders. I know you watched that report. How does that work into our equation?
Well, it has been kind of jaw-dropping in the livestock markets over the last several months. They've just been constantly buying live cattle, feeder cattle, and lean hogs. Friday's commitment to traders report showed funds were net buyers again, expanding their net long position to 107,000 futures and options contracts, which is 8 straight weeks of buying. And anytime you get fund positioning over 100,000 in live cattle, doesn't mean they can't add. We've seen them add up to 120,000, but above 100,000, and some of the warning signs start going off. Not necessarily that the market's going to turn on a dime, but if the fundamental landscape softens up or even stagnates, you have the risk of long liquidation, and it's a relatively narrow exit in the livestock market. And that's especially true not just for live cattle, but also lean hogs. Funds have amassed a net long position of about 127,000 futures and options contracts. They've been net buyers for 15 of the last 17 weeks. So a lot of people on one side of the boat there. If some of these technical levels give way, which would be 82 for that February contract, a break and close below there could start to accelerate some selling pressure, not necessarily on the back of weaker fundamentals, but just on the back of money flow and long liquidation.
All right, just a little bit left here, but any other markets you're watching Maybe even outside of the livestock markets, what's near the top of the list for you?
Well, we saw a lot of volatility in the outside markets last week. The stock indices got beat up. They're rebounding a little bit here today. We talked about the U.S. dollar. If that pulls back, that could be a tailwind to a lot of commodities. And a couple of the beneficiaries of that in the early morning trade today, gold and silver on the move after getting just beat down the last couple of weeks. But it looks like there may be signs of better things to come.
All right, Oliver, always great. Thanks for dropping by. We'll see you back here on Thursday. Oliver Slope with Blue Line Futures. Again, cattle